Trump is going to do everything he can to keep interest rates low. And if anybody believes that he can't do it, let's go back to the facts. Let's go back to 2018 when he was president. The Dow had its worst December since the Great Depression. What did he do? He forced Jerome Powell, the Fed head, to lower interest rates. They lowered them in January 2019. Markets went up some 22% in Dow that next year. He'll do everything he can to lower interest rates and keep the economy going. Again, the lower interest rates go, the higher gold prices go. The geopolitical uncertainty is another reason driving it up. Gold prices have gone down somewhat, over $200 from their high, but they're still way up there. And we believe they're going to stay up. And again, the wild cards keep being dealt.
Dubbed by the president as One Big Beautiful Bill, a newly proposed piece of legislation seeks to extend the 2017 Trump-era tax cuts, raise the debt ceiling by $4 trillion, and increase funding for immigration enforcement and the military. However, it also proposes spending cuts to programs such as Medicaid and clean energy tax credits, moves that have sparked significant economic debate. Veteran market analyst Gerald Celente points out that during the Trump administration, the national debt saw a sharp rise. While the official figure currently stands at approximately $37 trillion, Celente notes that when including unfunded liabilities such as Social Security and Medicare, the total U.S. debt could exceed $220 trillion, an amount widely seen as impossible to repay. This level of debt raises concerns about the long-term value of the U.S. dollar. As the dollar weakens, gold prices tend to rise, and that's exactly what we're seeing now. Indeed, the current economic environment has created a supportive backdrop for gold. Investors are increasingly concerned that central banks, including the Federal Reserve, may be forced to maintain higher interest rates for an extended period to curb inflation. This issue could be exacerbated by rising government spending. However, Celente argues that if interest rates eventually trend lower, as he expects, gold prices could benefit even further. Lower interest rates generally lead to higher gold prices, he notes. Add to that the current geopolitical instability, and you have even more reason for gold to remain strong. Gold futures have now extended their winning streak to a third consecutive day, mainly driven by investor demand for safe haven assets amid rising geopolitical tensions, particularly in the Middle East. Historically, gold has responded positively to geopolitical uncertainty, whether or not it escalates into full-blown conflict. The continued presence of such concerns in the news cycle is enough to provide upward momentum for gold. The impact on geopolitical stability would be significant, potentially causing ripple effects across global markets, particularly in commodities such as oil and precious metals. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
JP Morgan Chase just came out with an article a few days ago about the dollar declining another 20%. Much of the world has had enough of the United States geopolitical and socioeconomic hegemony. Again, go back to the Trump administration. Look at the debt level going way back up again. Need more money to cover the debt. When you look at the real debt, it's not $37 trillion. It's more like $220 trillion when you put in Social Security and all the other money the government owes out. There's no way they're going to be able to pay this off. Let's go back to the dollar. The deeper the dollar falls, the higher gold prices go. It's as simple as that. You're looking, and now the dollar's going down. Number two, they came out with the consumer price index numbers this week. The CPI was lower than expected at 2.3%. Trump is going to do everything he can to keep the economy strong. The way the economy stays strong is with lower interest rates. End of story. Again, he was the guy that pumped up the economy when he locked it down, when he called a state of emergency on March 11th, 2020 to fight the COVID war. Interest rates went down to zero, and they pumped in trillions of dollars of fake money under him and Biden, and other people around the world did the same thing. So let's go back to gold. Trump is going to do everything he can to keep interest rates low. And if anybody believes that he can't do it, let's go back to the facts. Let's go back to 2018 when he was president. The Dow had its worst December since the Great Depression. What did he do? He forced Jerome Powell, the Fed head, to lower interest rates. They lowered them in January 2019. Markets went up some 22% in Dow that next year. He'll do everything he can to lower interest rates and keep the economy going. Again, the lower interest rates go, the higher gold prices go. The geopolitical uncertainty is another reason driving it up. Gold prices have gone down somewhat, over $200 from their high, but they're still way up there. And we believe they're going to stay up. And again, the wild cards keep being dealt. Now let's go back to another thing Trump said a couple of months ago. We're going to go into Fort Knox and find out where that gold, how much gold we got in there. Remember he said that? Him and Musk? How come they're not in there? And number two, they know what's in there. They know. That's more the presidential reality show. Of course he knows what's in there. He's the president. So here's a guess. When I was a kid, my dad, may rest in peace, I'm about 18 years old. He said to me, you know, I was dating your mother back in 1933. And here's a picture of their wedding. I don't know if you could see that. Look how well dressed they are. My father worked in a fish store. They were laborers. That was America. Anyway, he said, I go into your grandfather, go see your mother, and he's wrapping up all the gold coins. I said, Grandpa, he said, Pop, what are you doing with that? He said, the president wants us, Franklin Roosevelt wants us to bring the gold back to America, and I'm a true American, and I'm bringing the gold to the president. And my father said, what are you, crazy? Don't do that. He turned in all the gold. They forced the people to turn in the gold. After they stole the people's gold, gave them $20.67 an ounce, the next year they passed the Gold Reserve Act. Hey, we just changed the price of gold. They increased the price of gold by 70%. So let's go to Trump. I mentioned the debt we have. There's no way in the world they're going to pay it off. But Trump will say, we went into Fort Knox. It's packed with gold. And we're going to raise the price of gold. It's time to raise the price of gold. And if they raise it another 70%, it wipes out the debt level. They did it before during the Great Depression, and they'll do it again as I see it. So that's another wild card that could be played.
Gold is once again drawing strong support from Chinese investors, with surging demand helping push the precious metal closer to last month's record highs. All signs point to a sustained bullish outlook from China, as individuals, institutions, and the state appear to be banking on gold as a long-term hedge against mounting economic pressures. According to the latest customs data released Tuesday, China imported 127.5 metric tons of gold last month, an 11-month high and a remarkable 73% increase from March. This spike in imports came despite gold prices hovering in record territory, having hit an all-time high of $3,500 per ounce in April. Even as bullion briefly retreated from its peak, the Chinese gold market remained a pillar of support. When gold prices dipped to multi-week lows, Chinese investors stepped in aggressively, driving prices back above $3,300 per ounce. Their consistent buying activity is a clear signal that sentiment remains strong across the country. Veteran market analyst Gerald Celente views China's gold buying spree as a strategic move. After grappling with a harsh 3-year zero-COVID policy that severely disrupted its economy, China now faces deeper structural issues, particularly within its real estate sector, which accounts for roughly 30% of its GDP. With widespread property market instability, including an estimated 60 to 90 million vacant apartment units, investors are seeking safe haven assets, and gold is their top choice. Let's get back to the interview.
Pushing people away, and they're supporters of the gambler gang that people call the equity markets. And by the way, again, it's total. You mentioned that nothing positive about gold prices spiking. Not an article in any of by the prostitute media. Prostitutes are media whores that get paid to put out by their corporate pimps and government whoremasters. Matter of fact, if you put my name in Wikipedia, I'm the guy that came up with the word prostitutes years ago. Not a word about the positive elements of why gold is going up and how high the prices have gone. Not a word, 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 because gold is expressing the fear that people feel, and they don't want that. They want you to believe in government crap. And BBC, they're owned by the government. I mean, you know that. Again, we're the BBC's articles about the genocide being committed. Oh, yeah, you anti-Semite, how dare you say that? Yeah, all right, that's the BBC. And going back to us, we see gold. Again, the Chinese are buying it up like crazy. And they realize how troubled their economy is since they locked down the place for 3 years with zero COVID policy, destroyed the lives and livelihoods of hundreds of millions, and they have a real estate bust. And 30% of China's GDP is real estate related. According to the numbers, some 60 to 90 million empty apartment buildings in China. So, go back again, but China's going to take the lead in AI. So going back to the equity markets in gold, we see a dot-com bust coming. They way overinvested in NVIDIA and all these other first high-tech. Trends are born, they grow, they mature, reach old age, and die. The AI trend was only born in 2022. It's only 3 years old. You don't invest all your money in the firstborn. And then we saw what happened in late January that's out of the news. Oh, a DeepSeek? Oh, the Chinese company that says, no, we don't need all those big chips. Oh, and by the way, we could do this, cost you $100 million to build your AI. We did it for $6 million. All right. Out of the news, and AI and DeepSeek is the most used AI in the world. Now let's go back putting trends together. And again, that's the way we do it. We make connections between different fields. Bill Clinton, bringing China into the World Trade Organization. Go back to 2000. In 2000, 10% of Chinese 18-year-olds went to college. China gets into the World Trade Organization, the economy booms. Now, nearly 70% of Chinese 18-year-olds are going to college. What does that have to do with AI? Everything. Young people are AI high-tech addicted. This is their life. You got 1.4 billion people there. We got 347 million in America. As America's dumbing down, China's wising up. These young people are going to lead the world in AI. It's the future. Again, love it, hate it, it's what it is. Just like, the internet revolution began only in the 1990s. And we said there would be, in your Trends Journal back then, .com bust 2.0, .com bust rather, .com right there. And now we're saying it's going to be a .com bust 2.0. In 1999, we said it would bust by the second quarter of 2000, and it did. And now we're saying it's going to bust. Back then, we said they're inventing stuff that doesn't make sense with this internet revolution. And they're putting a lot of money in IPO wannabes, and it's going to go. They're doing the same thing with AI. They've overinvested in these companies, and they're not going to produce what they said they are. China's going to take over. So when the .com bust happens, that's going to crash the equity markets and bring the world into the same kind of economic downturn that happened when the .com bust happened. As I said earlier, the debt levels are just going to keep rising. And again, they're going to try to do anything they can to beat it. They may come out with a digital coin. We got this new coin. We're doing away with the dollar, and this coin's worth this much money. Make sure you look what's going on. Here, in the Bronx, you used to say bullshit has its own sound. Let's go back to Trump in 2021. Couldn't stand Bitcoin. Couldn't stand it. And now his family, the Commerce Secretary's son, Lutnick, all in the crypto field. All in it, coming out their meme coins, you name it. It's all about the bottom line. So now with his family heavily invested in it, and again, we said in the Trends Journal, Bitcoin and other crypto prices are going to rise when Trump got elected. It's right there. He got over $100 million from the crypto club for his campaign, plus millions, tens of millions, scores of millions afterwards when he got elected, an inauguration, etc. And they're in the gang. So they may come out with a new digital coin, and it's going to replace the dollar, getting rid of that dirty cash. We're going to digital, trash. They'll make up anything. And I believe that's going to be the future. Look at China. People aren't using currency anymore. Everything, put your hand out, everything's digitized. And they know every penny you spent, where you spent it, what you spent it on. So they got more control over you, and they get all their tax money. Yeah, don't leave any tip in cash for anybody anymore. No. We know every penny that you spent, where you spent it, what you spent it on. So they get more control over you. So that's the way I see it happening. And again, all this is positive for gold. More digital goes, the higher gold goes. And by the way, if there was no digital currencies right now, gold prices would be double their price.
As economic uncertainties deepen and political decisions fuel financial unease, investors worldwide are showing renewed interest in assets that offer long-term security. Rising public debt, heightened geopolitical risks, and ongoing monetary pressures are driving a clear flight to stability, one increasingly anchored in tangible assets, such as gold. In particular, the unwavering appetite from global players underscores a growing skepticism toward traditional economic frameworks. As nations and individuals seek shelter from market turbulence and currency devaluation, the spotlight returns to time-tested stores of value that hold weight beyond paper promises. Could this global pivot toward hard assets signal a broader shift in financial trust, and are traditional monetary tools losing their ability to anchor investor confidence? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.